Hi there, my name is Rachel Stern. I'm the founder and managing partner of GovTech Ventures, and we're back for another weekly GovTech go-to-market video. And unsurprisingly, because I'm an investor, I have dozens and dozens of conversations every week around investing in companies. And often I come to the conclusion that they shouldn't raise venture capital. Not because they're bad businesses, quite the opposite. These are founders who built services businesses or highly customized software companies. They own all of the equity, and eventually I think they could make millions and build incredible businesses. Venture capital is just one financing tool, but it's not the only path to success. I have investors who entrusted me with their capital, and they expect venture scale returns within a finite period of time. That means I have to believe the companies I invest in through the fund can become dramatically more valuable over the next 7 to 10 years. So when I evaluate a company from a venture capitalist perspective, I'm asking a few questions. Can this business grow 100x? Is the market large enough to support that kind of growth? And if they execute incredibly well, who eventually acquires this company? But then I get to what I think is even more important questions. Does this business actually become more valuable as it grows? Does every customer make the product better? Does implementation get faster because you've already solved these problems? Does every successful deployment make the next sale easier? Or does every new customer require another customization, another implementation consultant, another support hire? Because those are two fundamentally different kinds of businesses. One compounds and scales beyond the team. The other scales most linearly with headcount. There's nothing wrong with the second model. In fact, founders build incredible businesses that way all the time. It's just not with venture capital. That's also generally why I don't fund people who are still trying to figure out their customers or build an MVP, because what's exciting to me is when a founder says, I know who buys this and we have more demand than we can keep up with. We need the capital to scale. That's what venture capital should be used for. It's fuel for a proven or very good hypothesis engine, but not a substitute for one. So before you ask whether a VC will invest in your company, ask whether venture capital is actually the right tool for the business you're trying to build. More next week.